And after solving innovation, we now need to solve the banks. I was in London on Monday, and the thing to do in London is to talk to the taxi drivers about the economy. And the taxi driver said to me, cuts, 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 and where has all the money gone? And that's exactly the question that people are asking themselves. Well, a lot of money has gone to the banks. Mervyn King, the governor of the Bank of England, even said as far as to suggest that never in the field of financial endeavor has so much been owed by so few to so many. Allied Irish Banks is just receiving a lifeline from the Irish government that will bring the budget deficit to 30%, 3-0, in Ireland. So the whole saga is not over yet. How to return the banks to their proper function? Mateusz Morawiecki is one of the leading bankers in Poland, president of BZWPK, one of the main banks. Do you have the answer?
Thank you, Pawel, and good afternoon, ladies and gentlemen. You're absolutely right. The saga is not yet over, and there lie a couple of new major challenges ahead of the banking sector and the whole financial industry all over the world, and in particular in the Atlantic arena, in Europe, in Western Europe, and in the United States. And what are these major challenges? I think we need to talk about them and be aware that first they have to be resolved, and then we can deal with all sorts of other issues like lack of innovativeness and lack of dynamism and structural reforms needed, very much needed in Europe, and other issues as well. So what's the major challenge right now? Most of you probably have heard about the stress testing which was made in Europe over the last couple of months. 96 banks were subject to this stress testing, and only 7 of those, and these were actually cooperative banks from Spain and some in Germany, failed the testing. So you may say, what's the issue if the significant majority of the banks passed the testing, not with flying colors, but nonetheless the situation was not so bad. This was hugely criticized, this stress testing exercise, first of all for its lack of taking into account sovereign debt. But at the same time, I have to say that this brought some additional transparency for the banking industry in Europe in particular, because the parameters were quite clear, and everybody, like every broker and every rating agency, could take these parameters and could introduce more stringent parameters and produce their own outcome. And they have done this, and in the course of the month of August and September, a new outcome appeared on the horizon, and the outcome was received with cautious optimism, that the situation in the European banking industry from the capital perspective, how much capital they need, is not that bad. However, I would like to point out at some huge challenges which lie ahead of us and which will be an obstacle to grow the European economy and indeed the American economy as well, if they are not sorted out. First of all, European banks need a lot of additional funding. The stress testing did not take into account additional funding, additional liquidity in the banking sector, which is needed throughout Europe. And funding is a prerequisite to lend money further onto the economy. Without funding, we cannot do this, and in Europe, much more so than in the United States, because in Europe, 70% of lending to the economy goes through the banks, whereas in the United States, 80% of corporate borrowings comes from capital markets. So only 20% in the United States goes through lending to corporations and to SMEs. So the United States is much less dependent on the liquidity in the banking sector as such. And the liquidity being a major problem in the banking sector in Europe is not easily to be sorted out, because first, let me put a couple of figures in front of you. European banks will need 2.5 trillion euros over the next 3 years to replace their existing debt, the maturing debt over the next 3 years. In the entire world, the banks will need 5 trillion euros. So huge debt to roll over and to refinance in the financial institutions. How to do this? Right now, as we know, banks go to the central banks. But how long can it last? I would say not so long. And in particular, this is not a viable, sustainable proposition going forward. So what the banks try to do is to go to capital markets to raise debt, to issue bonds. But recently we saw that they were bounced back, and a couple of investments which were not placed on the market appropriately is a signal that this is indeed going to be a major issue for the banking industry, both in the United States and in Europe.